Thank you for joining me. I'm Alex, and I want to talk about Enphase because I'm making this video by popular demand, and by popular I mean at least two people. So what they do is they make solar panels, inverters, and other stuff related to solar installations, and obviously hugely growing sector. So I don't expect there to be huge impact from the current crisis. At least not over the long run. The recession might severely cut into sales for obvious reasons. So current price is $54.49, which gives the market cap of $6.8 billion. There is no dividend. I don't expect there to be a dividend in the next 5 years, so it's kind of pointless to talk about it. Current revenue, $624 million, up from $316, so basically double the previous year. To be fair, though, it was pretty much even for the previous 2 years before that. So it was right around $300 million for 3 years and then jumped to $624 million. So would be good to figure out whether or not they can grow that over the next year again, or if that is more of a one-time thing. Earnings $161 million, up from negative $12 million, which is again huge. So PE is 33, forward PE of 36 is slightly high, but obviously with the current growth rate, that would be entirely justified. Total assets $713 million, total liabilities $414 million, both up. Assets obviously much more than doubled. Total stockholders' equity $272 million, up from $7 million. So obviously everything is going in the right direction. The problem with that is that the forward PE is higher than the current PE. So that means that they don't expect to have the same kind of earnings in the next year that they had this year. And I don't really think that they need to either. So I would expect them to shift more money into research and development, capital expenditures and all that, and trying to go more of a break-even, high-growth approach. So I'm not really concerned with that forward PE. I'd like to more look at the revenue growth rate, because it's so much easier to make a profit off of, $10 billion in revenue than it is off of $1 million in revenue. So overall, I would say everything's going in the right direction. Obviously, hugely growing sector, hugely growing company. The balance sheet looks amazing. The PE is the only thing that is slightly high, but I think more or less justified. So overall, I think that this is a good candidate for a growth investor. I obviously don't think this is a good candidate for a dividend investor, because I don't think there will be one. And for a value investor, the PE is slightly high, especially with the forward PE being even higher. And I wouldn't expect them to grow their earnings at a steady rate. I would expect them to reinvest into the business. So for a value investor, I don't think this is necessarily the right stock. But with a sufficiently long investing horizon, I think that it could be a good bet for a value investor as well. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.